Welcome back to the Eric Krown Crypto channel. Wishing you a happy and healthy start on this nice, actually very sunny Sunday, which is going to be a macro Sunday, as we're going to go over the higher term time frame targets that we've been looking for as they slowly play out in the last couple months here, and also go over the daily targets as well. So with that in mind, I do want to be wishing you well, and let's jump into it right now as I waste no more time. But before that, I should humbly request that if you do find this content valuable, I would humbly appreciate a like on the video, because it actually really does help. You don't have to if you don't want to, of course. And if you want to just dislike the video at the end, you're completely free to do that as well. Other than that, let's jump into it right now, and let's start with this chart right here. So this chart right here has been driving one of our major targets to the bottom side of this weekly range. That is the volatility versus stochastic chart, as you're going to once again see for the millionth time. But I want to point out that, you know, slowly but surely these things do play out. And if you've been on this channel for even the past couple months here, you've seen actually two other iterations of this, and this is going to be the third one, which is very close to its bottom side target now. And that is essentially this signal right here, the daily BBWP measuring volatility, the dispersion of returns. Got down to single-digit percentiles. In fact, not just single-digit percentiles, but just around 1 percentile actually. So incredibly low. And if you're not familiar with this indicator, it is mathematically programmed. It is a mathematical certainty that when you get very low compression, essentially, you are set to expand, which is your typical, you know, high volatility, explosive moves, if you will. Anyways, we've had 10 other iterations of this in the past year and a half to 2 years, not including the one that we're currently looking on. And they had an average, as you can see, back tested on this chart right here, again, represented by those green vertical bars for that expanding BBWP, has been about on average 20%, in some cases a little bit more, in some cases ever so slightly less, and then also done typically over the course of about a week to 2 weeks, which is very interesting. Not to, you know, be throwing shade or spending my time on this, but it was very interesting to see when I first started talking about this a few weeks ago that, you know, a lot of people were like, hey man, where's this signal playing? Hey, what happened to the signal, Krown? Like, it's like, sir, you know, you're judging a 2 week long signal, perhaps in day number 3, you know, let's hold our horses for a second. Anyways, for the people who are patient, you have now seen this play out for, I guess, a third time now, or almost for a third time. And we can see that, granted, the expansion point right here, which happened just above 40,000 bucks, the technical target, or the average historical relevant area to be looking at, I should say, would be around about 32.5 to 33,000 bucks. I should also let you know, once again, that the direction was correctly chosen on this by two things. One of them being the stochastic momentum oscillator right here, of which anytime that we've seen that first expansion phase plus a clear direction on the stochastic momentum oscillator, there has been 8 out of 10 times the correct direction called. On top of that, we've seen, especially in the last few iterations, the first move off of that expansion has also gotten the continuation as well. In this case, to the downside right here, that first move, that first day on expansion, again down about a few thousand bucks actually, from 40 to 38 in this case. So yes, you know, based off of this, I am still looking a little bit lower, but I would be looking for bounce off that area. It's very much confluential with several other things that we're going to look at in a second right here, such as this, which I brought up yesterday. This is the macro fib going from macro all-time high right now to our prior macro low, actually. And we do see that the 0.5 Fibonacci retracement is right around that low $32,000 region as well. Also in line with the spike lows that we saw from January of this year, and, you know, traditionally going to be a nice bounce region. Not to say that things are going to bottom out there. However, if I was to present a bit of hopium here, which I do think could be relevant, although we're going to go over the statistical analysis of other higher and more macro timeframes, which suggests that this is unlikely. But if we are going to see potentially some hopium, or what I think is the most reasonable hopium, of course, is going to be something like this, where Bitcoin comes down somewhere around that $32,000 to $33,000 region, spends some time going sideways, puts in an ever so slightly higher low than that 32,000-ish region on the weekly scale, and then kind of, you know, works its way upwards and onwards slowly in the following months, probably all throughout the summer, and then most importantly busts on through, does some busting action back above about 40, what is it, like 43 or 44,000 bucks. That's where I'd be very comfortable being macro bullish, looking for humongous moves back up to prior all-time highs, and probably even beyond in the following months from that. Until then, this simple setup right here has been, well, all that it really needs to be if you are in the weekly time frame. Hidden bearish divergence, very low volatility, downtrend. Well, what's most likely to happen? Continuation of downside. Weekly jewel also pointing down as of the past couple weeks as well, which is going to add some further confluence into that. And so I would say, while the hopium probably would look like something as I just drew out right there, if it is going to happen, I do want to once again be on record as saying that it is rather unlikely, statistically speaking, as we're going to go over soon enough. Also on this thread of analysis, I should point out here that also in confluence with that low 32,000-ish dollar region would be this, the log curve chart here, the macro log curve chart, I should say, of which we do see the bottom green end of this has been accurately getting, despite some wicks here and there and some deviations like you saw in March 2020, but more or less getting the macro lows for Bitcoin over the course of its 12-year or so history, or sorry, actually, yeah, I guess like 12 years, something like that, whatever it is. The history, the full-on history. And what do we see? The bottom end of this green zone right here is basically around that 33 to 32,000-ish region. Yes, if we do get another major washout, the lower deviation of this would be about $25,000. Keep that number in mind. It's going to pop up a few times a little bit later. But ultimately, I would feel quite confident in saying that Bitcoin's very likely to bounce off this region right here. Even if it does end up going lower, that's generally going to be a nice stopping point playing out. Again, this chart over here, this chart over here, and this chart over here. And of course, when we reference the higher term timeframes, it should be known that, momentum is starting to like really get extreme here. Of course, when it gets to extremes like this, it doesn't necessarily mean that it's like guaranteed to pop the other way, but it becomes more and more difficult to kind of keep it this aggressive for this long. You typically get some nice bounces at minimum, maybe a reversal. Again, I don't want to like discount the hopium fully just yet, but understand that hopium does imply that it's quite unlikely. Anyways, other than that, let's now get into perhaps the non-hopium stuff. I'm going to bring up everyone's favorite fucking chart right here. It's certainly my favorite fucking chart, and it is this, the 5-day BBWP versus momentum, or stochastic momentum, I should say. And it's never gone away. We got our first signal that this one was going to play out earlier this week. Or sorry, I guess it kind of started the last week of April and then was fully confirmed earlier this past week, actually. And what do we see right here? We see a couple things of very great interest. First and foremost, this is obviously expanding. So this is the move. This is the signal. It was fired off earlier this past week, or late April, depending upon how you can look at it. I would argue late April, actually, which is kind of what we were saying. And the 5-day BBWP, again, measuring volatility, the dispersion of returns over the past couple of years, anytime that we have seen, especially into the teen-digit percentiles, the expansion phase from that has led to an average move every time, an average move over the last couple of years, and we can go back further than this in time as well, of about 45%. That 45% move typically done over the course of, on average, again, a little bit over 40 days. And to be fair, because this one was contracted for much longer than especially the past 4, not necessarily this one over here, this one did get down to single-digit percentiles for a while, it would be relevant to say that the expansion phase from this one probably going to be more explosive than the last few ones that we did see. It's probably going to be on the upper end of that, of that average, if you will. So what we then used was the 5-day stochastic momentum oscillator to gain direction for this, because anytime that we have seen volatility expansion plus the stochastic momentum also showing direction on that first expansion phase, that has been the correct direction for that 45%-ish or so move. 6 out of 6 of the last times. Again, we can go back further than this, but this one's just nice and easy to visualize here. Anyways, this was the most recent one right here, and this is why we've essentially been saying, hey, ever since like late March, early April, Bitcoin significantly more likely to play to the downside before that. Significantly more likely to play to the downside than the upside on the macro based off of this. Before that, there was certainly hopium with this, but getting rejected right at the bullish control zone, also playing out a trendline regression rejection, and now officially getting into the bearish control zone. I would still say that I remain, looking at Bitcoin as much more likely to trade lower. There is much more risk to the downside as long as this condition is met, and we can forecast the price that would be needed in order to force this to cross back onto the upside, and that would be 41,000, and that is closing not tonight, but tomorrow night, I do believe, or sorry, not tomorrow night, but the night after that. So Tuesday night at 7 p.m. Eastern time. So assuming that Bitcoin's still below 41,000 bucks, pressure does still remain lower. Again, there's going to be bounce along the way. And if we do forecast about a 45% move from that expansion phase, that would that would kind of suggest a target somewhere down around about $24,000. If you recall back on over here, that is certainly around the lower end of this baby right here. Yes, we can wick lower, that's fine. Although it does suggest that, we're probably looking at a pretty fucking nasty move, to be fair. But yes, that is within the cards as far as I'm concerned from a statistical perspective, which is really what I want to be coming at from on this, on videos like this. On top of that, this chart also still has gone away. This is the secondary chart where I have the Bollinger Bands plus the old McDonald's indicator, and then the PMARP, of which these three signals combined have led to a move each and every time over the past 3 iterations throughout Bitcoin's history. There's only 3 iterations, so it's not always gonna be perfect. But down to that green moving average, which is a 55 exponential. The signal is this: monthly MACD crossing the downside. Happened 3 other times in Bitcoin's history besides the current one that we're looking at right here. And well, that signal combined with the PMR losing the moving average right here, but we don't need to focus on that too much. But that signal then gets catalyzed by losing the white moving average on this chart, which is a 20 simple. So first MACD crosses the downside, or the PMR actually loses its first, and then the MACD crosses the downside on the monthly. And then once price action closes even just slightly below that white 20 simple, that move gets catalyzed down, or historically has been catalyzed down to the 55 exponential, over the course of 1, 2, 3, 4 months, and then takes about, another half year to base off and get going yet again. Same thing over here in 2018, obviously. Spent some time dancing around that white 20 simple, closes below it ever so slightly in October, and then boom, massive girthy red dildo party for the next few months as Bitcoin finds its low, and then about 3 months later, rally time yet again. Same thing over here, although this one did go all in one go, and then still took about 4 or 5 months for Bitcoin to get going yet again. And what do we have over here? Well, again, we do have the monthly MACD cross the downside. We lost the PMAR month before that, and of course, one of the big focuses of of the last few videos, as Bitcoin did close the month of April. Yeah, April. I'm just trying to do my monthly math in my head. Below that white 20 simple. Well, been saying, hey, there might be rallies a little bit north of 40,000 bucks, but as long as Bitcoin's below 41.5 on the macro scale, which is where the 21 not the 21, but the 20 simple is, risk does remain lower, probably bounce somewhere right around here. And then, the 55 is, guess where? Right below 25,000 bucks or so. Take that one step further, or can we take that one step further? Yeah, we can also take that one step further. So this next thing that I'm going to talk about, and again, we haven't even mentioned short-term timeframes at all. I don't even really want to cover them on this particular video. Is there going to be a bounce or not? There's probably going to be a bounce short-term. I don't think that Bitcoin fully breaks down before stocks open up a little bit later. But what's the next big thing to kind of be aware of that is happening as soon as today? Well, that would be this chart right here. And that would be the, what seems almost inevitable at this point, cross that is setting up between that yellow 21 exponential and that green 55 exponential moving average. This is called the silver cross, and the reason why it's relevant is because historically it's pretty fucking good. Now, to be fair, there's only a couple or actually 3 iterations of this. One of them terrible, but that was during a bit of a black swan. We aren't really seeing the same thing right now. I mean, that is different than this, at least in my humble opinion. Other than that, we've seen it a couple other times, and it's typically been at the end of a major market cycle. This first one coming in over here from 2014 in November. You can see that after the cross happened, Bitcoin does get another rally around that cross, rejects it obviously, and then I took the high of the I took the high of the rejection to the low of the low, and that was about 63.5% move to the downside done over the course of 63 days. Again, that was just from high to low on that one. Obviously, it takes many more months for Bitcoin to actually reverse out of that reaccumulation zone, or accumulation zone, I should say. Same thing over here in 2018, gets across right here, one last rally attempt. I think that was off of the Tether news or some bullshit like that. And then a few months later, 56 days later, I should say, Bitcoin finds its low, and then a few months, and then 3 months later, it gets on a nice rally yet again. This one over here in 2020, obviously this is not going to be a good one. In fact, this one, crossed after the fact. That's because, most of this move was done just in one fell swoop, obviously. But in this case right here, this cross, we can also forecast the price target for, or sorry, not the price target for it, but we can forecast what price would need to close at today in order to fully confirm it. I think this kind of, I will not say a foregone conclusion. That's not wise, but rather likely as of current moment in time. You know, of course, we've all seen more crazy things than like $1,000 rally over the course of 16 and a half, or sorry, almost 17 hours. So definitely possible. But then again, this number is 35,642 in order to force that one down. And again, there's going to be rallies along the way. I mean, probably as soon as you get the cross, you're probably going to base off, I don't know, some later this month or next month and try for a bit of a rally. But yeah, at that point, you kind of have to be looking for lower highs as far as I'm concerned. So let me take this off for a second here. I did miss one other thing with a confluential target towards the $25,000 or so region. That's going to be the 618 Fibonacci retracement on the macro scale here as well. And you can also visualize that white 200 simple moving average on the weekly is also starting to crawl its way up around that region. It should be there, you know, late June, early July-ish, I would imagine. You know, for what it's worth, Bitcoin has put in all of its macro lows around there, you know, again, for what it's worth. But I don't look at this as relevant until Bitcoin, you know, fully closes below about 30, about $32,000 or so on a weekly or at minimum a 5-day. That'd probably be good enough for me. Again, probably another bounce somewhere around like 29 if you had to call it like that. But ultimately looking somewhere down around there if we do indeed get something like that. Other than that, we could, you know, if I wanted to bring out what I think is like the worst case potential scenario that might be relevant. I personally don't think that this is relevant on a closing basis, maybe on a wick basis. This is about as bearish I can get if I really like go deep into the bear drawer. You know, which I want to remain fair and balanced here, like Fox News, right? But at the same time, you know, we do see that there is a statistical relationship between the percentage drawdown or the percentage move down off of that silver cross. And in this case, the first one was 63.5%. The second was 54.5%. This one over here, you know, generally speaking, went down about 50%, but it did happen after the fact. Here's the thing though, we do expect this number to be less severe over time on a maturing asset. You can see from this cycle to this cycle, you know, basically 10% less. From even this year to the next year or so was about 5% less almost. In this case, you know, I'd imagine if we were to kind of draw a direct relationship to that, you know, at worst, you know, probably like 40 to 45% down. Where does 40% put you? 23%, or sorry, not 23%, 23,000, or a little bit above 23,000. 45 puts you at about 20,000. So, you know, that would kind of be my worst case scenario. Obviously, you also got the good old CME Gapola there for the Gap boys, which, you know, if Bitcoin comes back down around that $24,000 area or so, you know, it's going to be an area of interest. But for right now, again, please understand that this is not happening today or tomorrow. In fact, Bitcoin's probably more likely to bounce relatively soon off this region right here. And then the question is, does Bitcoin basically trade back above 37 or basically 38,000 bucks again? If it does, then we can look at the the major downside targets as less relevant for the short time being. But until that happens, you know, risk does remain lower, and I think that's a good place for me to leave off on this video. I hope that this one serves you well. I think I forgot maybe a few other housekeeping things. Yeah, we got the trading journal on the Krown trading application. It's free. You can find a link in the description below. Also, Instagram. I have an Instagram account. It's in the description below as well. I should let you know that there's a bunch of scammers on there, which is why I want you to know that if you're getting contacted by anyone, it's not fucking me. And the only Instagram account that I have is in the description below. Any other account is a very likely scammer. And then Bybit. Yep, good old Bybit shill. Make sure that if you're going to get wrecked in this market, go get wrecked on Bybit, specifically with my link. Just kidding, man. As always, you know, don't use these fucking leverage exchange. Don't be trading at all unless you already have back tested whatever strategy, whatever theory that you have, and you have good statistical results that you are comfortable with putting to work. Until then, you know, very unwise to be doing such. And for my moral conscience, I would humbly request that you do not do such. You know, if you are already trading and you got that all sorted out and everything, hey, it would be appreciated, of course. But at the end of the day, man, it's up for you to decide. And I will sign off on that note. Take care. See you hopefully soon.